I'm based in Brisbane, Australia, so I've had to quickly eat dinner, do the dishes, and then jump into my home office here to join you all. So thanks very much for spending the time and taking the effort to come along this afternoon. Let me just introduce myself. I'll get my technology going. Bit of my background, so you understand where I'm coming from. Excuse me. I'm the founder and CEO of AML Solutions International, and we also have a presence, obviously, in Australia called AML Solutions Australia. We set up several years ago, 6 years ago now, on an international platform. My partner and I were both ex-Austrac management staff, and we set up our business to assist fledgling financial intelligence units in sub-Saharan Africa primarily. Excuse me. And we've developed on since then. So we've done work in Qatar, several trips to Qatar, as well as Jordan, Lebanon, Ethiopia, Tanzania, Uganda, Kenya, Namibia. We've done work with UNODC in Botswana and South Africa and Panama. Excuse me, haven't had a problem until I started talking. So we've been around the world delivering all sorts of technical assistance and training, and that sort of work that we do there is primarily working with law enforcement agencies and intelligence agencies and helping them understand money laundering, what it looks like, how it's performed, what are the sort of criminal actors that are playing in that space, as well as what are the investigative and intelligence practices you can use to help detect and prosecute the criminal actors in each jurisdiction. So primarily, you find about 80% of legislation is fairly similar around the world, because obviously it comes down, with those 40 recommendation guidelines from the Financial Action Task Force. And so you'll see a lot of the legislation around the world has a very similar look and feel. And so you can walk into any country and have a fairly comfortable starting position. So that's what that allows us to do there. In Australia, we work with a wide range of sectors, from the banking sector, stockbroking firms, foreign exchange companies, even down to small remitters run by one man out of their bedroom, so to speak. So we really have covered off quite a large space in Australia. We help develop risk assessments, writing AML CTF programs and procedure documents. We'll do independent reviews. We'll run training such as this, and then general consulting. So tomorrow afternoon, goodness, sorry, I'm spending half a day with a finance company who have just started out, and they basically need somebody to hold their hand while they're getting up to speed with it. So we do that sort of work on a fairly regular basis. On the slide there, you'll see the two other badges that I've brought out to highlight my career. The first is the Queensland Police, where I joined the Queensland Police Service straight out of high school, basically, and was operational as a police officer in uniform from 19 years of age. I did 15 years with the Queensland Police in a variety of roles, general policing and investigations work, plainclothes work, crime squads, as well as doing training. I worked at the police academy for a number of years, providing training to serving police. I did high-level security planning for a multinational government meeting that was held here in Brisbane, and that was impacted by September 11 terrorist incident in the US, and that's really what shaped my career. My whole career then became about counterterrorism, with a clear focus on that. I worked in an aviation security area as well, and then the natural move then was to Austrac with that terrorism financing focus, as well as the money laundering side of things. So that's my career in a nutshell. And now, through my work in Australia, I've done extended periods of time at a bank running their AML operations team of 34 people. So I've seen the AML world from a number of different angles, probably more than most. You'll find a lot of people will only be in that banking sector or the finance sector, or will only be in law enforcement. So I've sort of crossed boundaries there over the last, certainly the last 6 years doing this business, but I've been in the AML sector for at least a decade now. So that's it for me, about me. But what we're going to talk about this evening or this afternoon for you is really about understanding AML CTF risk and the governance side of things there, and then how technology is growing to help us in that world. Now, I understand that we'll have a variety of experience on the webinar today. So some will be very experienced in this sort of work, and others maybe not so. So I'm sort of going to cover off a few different areas there, which may be basic for some people, but quite complex for others. So please bear with me, depending on where you sit on that spectrum. I think it's also important to present as well that the term regtech and fintech were really terms that didn't exist 6 or 7 years ago. It was, and even when I started in AML, 10 years ago, the concept of AML operations and investigations within the finance sector as a career weren't really strong. It wasn't really discussed like that. But over time, over that past 10 years, it is very much a career opportunity that will take you around the world. So one of the guys that I worked with, a young fellow, is only 23 years old, was working in the financial crimes area of a reasonably small bank here, of a customer base of about 1 million, and a wide range of products though. And he'd had about 2 years experience. He's now taken a position over to a multinational bank in Poland, of all places. So just absolutely fascinating that to me that how quickly the shape of this environment has changed in a really short space of time. And one of the key drivers for that as well, or key areas that has been impacted, is that technology space. And those of you who are operational in that know how vital it is. When you're dealing with large data sets, it's just too much for the human eyes to digest and process in a sufficient time for it to be meaningful when you are trying to take action. So the evolution of fintech and regtech has been on a near vertical learning curve. So we'll get into that a little bit further down the track as well. I also want to spend a bit of time here in the risk-based approach, making sure that we've got a foundation stone for everybody on the webinar this afternoon. So along the way, as Malavan said, we want to make this sort of interactive. So I'm going to ask you questions, okay? And I need those answers to come back to me. Otherwise, I'm just going to be sitting here twiddling my thumbs. So please, I want to get this discussion going. So please, when I ask a question, if you could jump in and contribute along the way, that would be very beneficial for us all, because it's not about me just sort of sitting here and pointing at various things. There was a gentleman there from Malaysia, brilliant, and others in Qatar, and I'm in Australia. So we have this multinational capability that we can draw on and hopefully share those experiences. So we're going to spend a little bit of time in the risk-based approach so that everybody understands where that is. We know that there's a very broad concept. Risk management and risk assessments is conducted in a whole variety of different disciplines. It's not just AML, obviously. So, and it can be overwhelming when you're new to this. So you need to have a starting point, and we need to break it down into bite-sized pieces so that you can process it and move through all the different facets of it. And what's done for the purpose of this exercise is just to break it down into two key areas of business risk and regulatory risk. If I say business risk is the risk that your business faces in terms of being used by criminal actors for money laundering or terrorism financing, okay? Now, regulatory risk is that's associated with your organisation not meeting its legislative obligations under your relevant AML/CFT legislation in your home country. So business risk, at what sort of risk is your organisation vulnerable to criminal actors? And then the regulatory risk is that more internal side of things, is if you're not doing your function properly, what is the risk of enforcement action of some description by your regulator? So I want to ask a question now. Here's the first question for you. What would you say are the 4 key business risks, and what would they be? And anybody come up with the first one? If I give you the first one, and then we come up with 3 more. If I say the first risk to look at is the risk around the customer, why we do KYC. So if we say customer is the first risk, what are the other 3?
Hi, my name is Kausar from Qatar. I'm working with the exchange company. So the second risk is product risk. Third is geographical risk. And third is delivery channel risk. I mean, the remaining 3. Yeah.
Brilliant. Thanks, Kausar. I appreciate that.
You're welcome.
Perfect. Does anybody have anything else to add there?
Hi. Okay, I'm not the one who's going to give the answer. This is from Sivaraman. He mentions vendors.
Vendors. Okay. Well, that would be in the channel risk. Yeah.
Yes.
Yep. So that would be a subset of the channel. Yeah. But yep, absolutely. And so what about the regulatory risks? So what are the sort of things that you face in relation to the regulator not being happy with the operations that you have in place? So if I was to say the first one might be that you don't have an AML/CFT risk assessment done. And then the second one might be the actual program itself. What other things might you be vulnerable to within your organisation from the regulator?
Todd, sorry, we do have some comments on the chat.
Okay, great.
Probably you'll understand this better than me.
See that?
Yes, okay, if you just open your chat, it's at the bottom.
I've got 2 screens going here, so it's not coming.
Be at the bottom of your on the Zoom window.
I get participants share, annotate, remote control, more. Okay, chat 12. Okay, aha, right. Jurisdiction product interface, great. Yes. Compliance to the regulatory requirements, yes. Each country will have its own regulations, yes. Very good. All right, I might put that up there. I'm conscious that you can see everything that I'm doing here, so I'm probably pulling some funny faces. We're going to look at also things like, so each country will have its own regulations for whether the business is compliant. Yep. And some of those subsets within your actual program are what we're looking at here. So if your customer verification isn't done properly, okay, we've got case studies everywhere of that sort of thing causing regulatory impact. If you're not training your staff properly, this is the training side of things. It's so great that we have this training capability through this COVID crisis, because training is such an easy thing for organisations to drop off. It's an expense that they don't really want to put their resources into, and so often training drops away, and certainly in crisis times such as this. But it really does leave you vulnerable if you have frontline staff that don't, in terms of the 3 lines of defence, the first line of defence, your frontline staff, if they don't even know the concepts of money laundering and terrorism financing and what their role is. Internal customer risk, I see here some Vimal, willful blindness. Oh my goodness, yeah, willful blindness is an absolute scorcher of a topic. So so training of your staff and failing to actually submit your reports, whether they're threshold transaction reports, cash transaction reports, suspicious matter reports, and so forth. A lot of businesses will have a zero reporting regime. So over 2 or 3 years, they have submitted no suspicious matter reports. That is going to be a red flag to any quality regulators that will say that doesn't fit with what we expect of your industry. If you're in the banking industry and high finance, you should be submitting multiple suspicious transaction reports per year. What that number is going to vary depending on the size and nature and complexity of your business. But if you have a reporting regime of 0 for your suspicious transaction reports, I would dare say that the regulator will want to come and talk to you about it. Also, not having an appointed compliance officer, nominated compliance officer who actually knows what they're talking about and knows what their responsibilities are. So some of these are just those key regulatory risks. So my home regulator is Austrac, and these are some of the key findings that they've produced year on year. It's amazing how little that list changes of issues that they see from when they're doing their supervision work. I think it's also important to note here that we're in the business, in the banking sector and finance sector, we're in the business of making money. You don't have to apologize for that. That's the purpose of the actual business. So, but it can't be making the money at the expense of your compliance obligations. There has to be balance. And I understand that is a hard juggle and a hard conversation to have with some senior executives who are driving, the need for income into the business in order to affect profit lines and shareholders and so forth. So, but what we're dealing with here is risk mitigation, not risk elimination. Okay, so, and we can't mitigate the risks until we actually know what they are. And a lot of people don't get that concept of mitigation versus elimination. If you're not, if you're quite new to the risk management world, you'll think, why don't we just, why can't we eliminate the risk? We have to understand that we're in this business, and there will be residual risk no matter what you do. You're never going to pull it down to 0. We will always have money laundering occurring through the finance sector, but you have to demonstrate that you are taking substantial proactive measures to mitigate that, to reduce that as much as possible. But sooner or later, there comes a time where the organisation will say, we understand that that's a risk, and we have to live with it. We are comfortable with that level of risk. And that's what's broadly termed as your risk appetite. And if you want to put that into examples, if you consider digital currency exchanges, so people that work with digital currencies, cryptos, you'd probably expect them to have a higher risk tolerance to a domestic bank. Okay, so they understand that all sorts of business risks that go on in the cryptocurrency world, the volatility of the market, some of the people that are playing in that space as their customers, versus a small startup bank in a regional area, so where they want to protect their brand and build their brand on trust and so forth. So, 2 key terms that you ought to be aware of in the risk management world is likelihood and consequence. So, has everybody seen heat maps such as this? Is this new to anybody? Something coming through. So I'll just point this out quickly anyway. You can drag these sort of examples off the internet to your heart's pleasure, because risk assessments can be as complex or as simple as you make them. What we've got here is a simple A to E scenario for likelihood. and a 1 through to 5 scenario for the consequences. And what that means is, what is the likelihood of a particular criminal activity occurring through your bank? Okay, what is the likelihood of a particular criminal actor, whether they're domestic or international, conducting some sort of business within your bank? And then you have to make an assessment. Now, some of this can be very subjective, and if there is, if you have quantifiable data over a period of time, then that's the sort of information that should be used to guide you in as you go through your risk assessment. Additionally, it's also important when you're at this level that you aren't doing the risk assessment all by yourself. You must have a wide range of people with relevant experience in the room with you as you're doing this. So somebody that maybe the head of the business area, somebody from compliance, somebody from the frontline staff, because everybody has a slightly different view. Everybody has a different operational capability and experience. And that sort of discussion is really, really valuable to drawing out a meaningful risk assessment. I've done this recently with a large nationwide finance company and a neobank that's starting up. And particularly with the neobank, after we spent a better part of a day stepping through all of this on a technology platform that I'll show you later, they said, as a result of doing that, they said, we have to go away now and rethink about a bunch of things because we had never thought about it in this context before. And we're not ready to go to market with our online platform and our app. So we need to go and fix a few things. Now you can take that a couple of different ways. You can be consider that straight into crisis and say, my goodness, this is terrible. We are in a real strife here. Or the version that I'd prefer to take is, this is an opportunity to build a better product. Now you understand where some of the holes are in your system. Let's go out and fix them. So that's the whole purpose of it. So, so your likelihood scales from rare through to almost certain, and the timeframes that are included in there are examples only, and you can make that, as I said, as complex or as simple as you like. You might have a 3x3 scale where you've got high, medium, and low only. Whatever it is that suits the need. If I was a small remittance company, I would probably keep it at a 3 or 4 level scale. But if I'm a multinational bank, I want to go get as much information as I possibly can. Are there any questions out from the audience at all? I've got one online here about artificial intelligence and machine learning. Perhaps we'll get to that in a little while. I think my key message out of AI and ML stuff is that it's still early days, and I think there's probably still a bit of apprehension by the market to pick up first generation AI and machine learning. There's a lot of companies out there that are promoting fantastic things, but I think when you manage a business with limited finances allocated to this sort of work, you're going to pick and choose very, very carefully because it's very easy for a talented salesperson to stand there and say, have a look at this fantastic technology. It can do all of these things for you. Somebody goes out and buys that and then tries to apply it in their business, and they get found wanting, and then they've spent $1 million or $2 million for something that just sort of sits on the shelf. So there is absolutely a future for AI and ML for sure, and I think we're a little, my personal belief anyway, is that we are still a little bit away from having truly sophisticated and meaningful AI and ML activities going on. The challenge with that is some organisation has to prepare to take on that risk and run with it and learn from it, and with that understanding that they need to get generation 2, 3, and 4 in order to really sort of get those benefits. So it's a brave organisation that makes that spend, I think. So we'll move through this so I don't burn up all of our time here. You're welcome, Vimal. So the consequence scale comes through from insignificant through to catastrophic. Again, as you look through that table there, you can see that you can include a financial figure if you like. You can put in reputational risk. You can adjust, those sort of things again to suit your needs there. And then once you bring it all together, you have what is called a heat map. We've got up there the risk matrix, and it's obviously sometimes referred to as a heat map, where you simply cross-correlate the likelihood and consequences and match them up, and to determine whether you have up to the top right quadrant there is extreme, high, medium, or low impact on your business. And if you have something, generally speaking, if you're coming away with a high and extreme risk, that is where your organisation needs to focus its time, money, and resources to bring those risks down to a more manageable level within the risk appetite of that organisation. So specific now to money laundering and terrorism financing risk, I want to pose another question to you. What is the difference between fraud and money laundering? Very often we hear when I talk about, deal with customers or with presentations such as this, people will say, yes, I understand. Oh, you're in the money laundering world, and yes, I know all about that. We have fraud occurring here, and so we have to manage that. That is always, Francis, yes, fraud is a predicate offence to money laundering. Yep, great. When people say you're from money laundering, I understand money laundering because we have experienced fraud. That's always a red flag to me that sort of says, I don't think you really understand money laundering as well as you think you do. Money laundering, yes, Ashish has given a fantastic definition there. Concealing the origins, yes. Fraud doesn't necessarily involve money. That's an interesting one. If I could summarize it to say fraud is the act of getting the money from you or getting the money from somebody else through deceptive means and dishonesty. That's the mindset of the criminal actor, is how do I get money from you? How do I get, to Sivamaran's point there, how do I get access to information or some sort of asset? So he says his point is it doesn't necessarily involve money, which is a good point. But fraud is about obtaining something, and what we're dealing with here is money, obtaining something from somebody through deceptive means. Whereas money laundering is, I have this money, all this money sitting here, I now need to do something with it to make it look like I've obtained that legally, okay? So the way that you've obtained it illegally may well be from fraud, and then you move into a money laundering process, but the two can be mutually exclusive. So, and that to me is generally a good divider when you're talking to people within your business who say, yes, I understand money laundering because I've dealt with fraud. The two very distinct disciplines from a criminal perspective. So Vimal, maybe derived from HIFTA and HIDTA. I'm sorry, I don't understand those terms, HIFTA and HIDTA, and integrated and used legally for terrorism financing. Yes, and other stuff. Yes, absolutely. Yeah, as was pointed out there earlier, that fraud is one of the 21 predicate offences as well. So, which is also, from our world, one of those defining characteristics. so as you'd be aware, that the Financial Action Task Force created those 21 predicate offences, and then it's up to your home country to derive that into your own local legislation. So maybe some jurisdictions don't have all 21 of those offences considered within your home AML Act, and it may refer to maybe a penalty side of things. So in Australia, a lot of it is referenced to a serious offence, which is defined as liable to imprisonment of 3 years or more. Vimal, high intensity financial trafficking area, high intensity drug trafficking area. Okay, all right. Oh, that's a new acronym. New for me anyway. Thanks, Vimal. Okay, so does anybody know, can you advise me, I know we've got a couple of different countries involved here, how is it represented in your home country? Are the predicate offences defined within your AML Act, or are they referenced to another potentially criminal code or something like that? We're not sure. Maybe that's a research topic down the track then, to understand how that connects. It's an important connection to make. The two sides of that important connection is one for law enforcement, so that they know how they can prosecute somebody, but from an AML operations perspective within a bank, and your job is to produce suspicious transaction reports, you need to conduct your investigation in a way, Omar, in Jordan, all the crimes can be predicate offences. Okay, thanks, Omar. As an internal investigator within your home bank, you need to be understand what it is that you are potentially investigating within your own small world, within that the bank's ownership of information, in order to direct your suspicious transaction report in the right way. So if you think it's what you are looking at is a drug trafficking scenario, then you should have a bit of an understanding about what that offence actually looks like from your home legislation. What is it that, because your audience is law enforcement, through the Financial Intelligence Unit, and then it goes on to law enforcement. So if I'm sitting at the other end reading this report, I need to understand what it is that you're talking about back in your home bank, and I'm seeing this report 2 weeks later and say, okay, I'm not entirely sure what this person is talking about. So you need to be able to understand what the crimes are that you're investigating in order to word your suspicious transaction report in a way that is meaningful to somebody that's reading it, that doesn't have that same level of connection. But that's a whole other topic on how to write a suspicious transaction report. What are we going to look down here? So let's have a bit of a closer look at some of the risks. We talked about the business risk being products, customer risk, businesses, jurisdictional risk, and so forth. And we understand now that okay, sorry, a couple of notes here. In Malaysia, predicate offence is a money laundering offence. Okay. In India, anything related to money laundering is an offence, mainly corruption and human trafficking. Okay. In Qatar, any felony which generates funds. Okay. Terrific. Thanks, everybody. Interesting to see that, as I said, each jurisdiction has a slightly different take on it. I understand where I'm eating up the time here, aren't I, Malavan? I've got to get a long way through stuff. Maybe I'll push through a little bit quicker on this. Is everybody comfortable with, I don't want to necessarily burn up too much time on business risk if we're comfortable with that. I'm going to look here, but understand that, if I'll just touch on a couple of points then, that where you are exposed to greater levels of cash, where you have cash coming into your business, there are higher levels of risk associated with that. If you do international remittances, that's a higher level risk as well. If you have a purely online financial institution where you're not having face-to-face contact with your customers, again, higher level risks that are associated with that there. If you're looking at your customers, are your customers politically exposed persons? Do you only have individuals, or do you have corporate customers as well? And then within that corporate world, it gets fuzzy very, very quickly once you start looking at the different corporate structures that organizations create, and whether that is for a legitimate means or whether it is something more nefarious. And that should be a topic of greater discussion as well, is when is a complex corporate structure meaningful? Why is that a reasonable way for that particular business to set up its corporate structure that way? Or is it, can you make the assessment that the overuse of trusts are used in order purely to hide the beneficiary of that organisation? So there should be some I think there needs to be a lot more training provided in that particular space as well, to understand the construction of different corporations, why they may be constructed for that purpose. Is it for better tax benefits? Is it for risk management, from a business risk management for that organisation, or what? So, and that helps us inform our decisions about whether it's a suspicious transaction or not going on. Somebody mentioned earlier as well, when we're talking about channels or delivery methods, how the sales team are used here, whether you have intermediaries or third parties that's selling your products, and whether your staff are incentivized through commissions to bring new customers in, open new accounts and so forth. And what risk does that to your organization of somebody being susceptible to bribery and corruption in order to bypass a few of these regulatory obligations that you have. In terms of country and jurisdictional risk, I have a bit of an issue with this on my own private concerns, because I think a lot of smaller organisations aren't really provided with a lot of assistance in this regard. How do they determine what is a high-risk jurisdiction when countries, home financial intelligence units and regulators aren't providing them with that sort of assistance? If you're a small business, and even if, smaller banks that don't have huge, teams of 30, 40 or 100 people, 200 people sort of doing this AML functions, if you have to do this largely by yourself, where do you get that information from? Are you going to things such as Transparency International and the Basel Institute and so forth? Are you looking at World Bank publications? Are you looking at your home financial intelligence unit publications and so forth? I think a big challenge with jurisdictional risk is understanding where to get the material from in the first place. Yes, Omar, I've got your hand raised here. And
hello, can you hear me?
Yes, got you, thanks.
Yeah, when we talk about countries risk, there is many lists. We can back Basel Index, Corruption Index, or FATF, High Jurisdiction List, Gray, or Blacklist. So when we take a risk score, we can have some advices for lists more interesting or more important than other lists to calculating in country risk. So the countries in FATF list, high risk in Basel Index or corruption, medium risk, and so that.
Yeah, absolutely. There's these great publications to reach out to. But interestingly enough, if it was the Basel Institute there, or the Basel AML Index, I think they had Estonia was listed in like the top 5, one of the as in the best countries for AML regulations and so forth, or low risk. But we have the whole Danske Bank issue there, where $200 billion worth of Russian organized crime money moving through one little branch of Danske Bank there in Tallinn. So yeah, I think there is still, look, there's nothing else for us to go to, but this is the best publications that we have available. My personal feeling on it is that I think there are better ways to do it. I think our home countries should be making that sort of assessment for businesses, but I also accept that they won't do that because the wider implications for trade relations and so forth, so we'll never see that come out as well. So, but that's a whole other discussion as well. We can go into each of these things for days if you want to, but I'll try to keep moving along here. So, ongoing customer due diligence, I think you should be comfortable with this sort of activity here. You're welcome, Omar, thanks. How the know your customer intersects with transaction monitoring and informs your enhanced customer due diligence. We should also be comfortable with the fact that transaction monitoring is a complex area, and a lot of organisations do struggle with transaction monitoring. They need to be able to understand what is normal transactional behaviour in order to then find that default position of what is abnormal, and that must be done over an extended period of time. I see some organisations that I do compliance work with where their idea of transaction monitoring is I look at the transaction and it looks fine to me, so I process it. So they're doing it on individual transaction at a time, so whether which is just horribly inept. So they have no understanding of proper transaction monitoring. So I've created this as a bit of an example, which is, again, here in Australia, where we've had the AML laws in place for 13 or 14 years, we're still getting it horribly, horribly wrong, where transaction monitoring needs to be both vertical and horizontal, where if we look at that, the savings account, the credit card, car loan, and you add on all of those different products that your particular bank offers, and I understand we've got a foreign exchange on here as well, so you may only have that one that product line, or maybe you do foreign exchange as well as remittance, so you've got 2. So if we're looking at that, what we see is a lot of organisations do the vertical very well. So they say, yes, we're looking at their transaction monitoring software goes over the savings account. We have another transaction monitoring that's done for credit cards and another one that looks at home loans or car loans and so forth, because the business is segmented. Over the years, the bank has grown, has brought finance companies, has brought specialist finance businesses and so forth, and left all of their legacy systems in place because it's expensive to replace them. But what it means now is all of that data, all of that transactional information isn't being viewed in its entirety. It's being looked at through that single lens of a savings account or a credit card and so forth. So what they need to be able to do is create what they call is a data lake, funnel all of those different sources of data into a large central repository in order to then conduct more meaningful transaction analysis. And that is very expensive, and as such, we're finding a lot of banks and financial institutions very hesitant to spend that sort of money. Unfortunately, it requires a strong regulator to start issuing severe fines in order to get that sort of response by the banking sector. And we are definitely seeing that sort of stuff in Australia and around the world. So what happens if you get it wrong? A couple of case studies here. Slip through these because I can see we're coming up to time. I don't want to overdo it too much. So Wells Fargo. So if you have Netflix, there's a great series on there called Dirty Money, and they look at the Wells Fargo case in the latest series, in series 2. And if you look at series 1, they have the HSBC case. So Wells Fargo, their staff were incentivized to open accounts, and they got their commissions and so forth based on how many accounts that they would open. And they were pushed and pushed and pushed by senior management. And so what they ended up doing is across the country, staff were opening up fake accounts, 1.5 million bank accounts, 565,000 credit cards were all opened fraudulently, basically, so that they were getting their pay rises. And as it's pointed out there, is that they told the regulators they felt extreme pressure to open these accounts. In Australia, currently our largest money laundering breach is with Commonwealth Bank, which is our largest bank, where they had a particular channel risk that they didn't assess properly. All of the banks here in Australia open up this what they call intelligent deposit taking machines, so ATMs that were taking deposits. All of the other banks put in a proper risk management framework on it. The Commonwealth Bank failed to do so, and then over that 3-year period, they failed to monitor all sorts of all the threshold transaction reports, the 10,000 plus transaction reports. So 53,700 reports that should have been submitted weren't submitted, and then many hundreds of suspicious transaction reports that should have been triggered as a result of all of that were also not submitted as well. So you see there, the suspicious transactions, had a total value of $625 million. So the regulator, sorry, before I finish that one. So what came out of that was a $700 million penalty imposed on the Commonwealth Bank. Today's that's Australia's largest ever corporate fine, $700 million. We are expecting to see an even greater fine handed out to this bank here called Westpac, where they make the Commonwealth Bank look like Boy Scouts by comparison. So what Westpac have done is they have bypassed the SWIFT reporting regime for international funds transfers. They created their own system, essentially. And as a result, there were 19.5 million international funds transfer instructions that were never reported to AUSTRAC. Now, Australia is the only country that has IFTIs, so I appreciate that. But it just sort of shows the scope of the problem, where they had technology in place, but they didn't use it properly, okay? So and the issue with Commonwealth Bank, where they tried to place a defence there that it was only one breach because it was one failure of a piece of code within the technology. That argument was defeated. But that's how they said it wasn't 53,000 individual breaches. It was one breach that was repeated over and over again. So here we have the comment from AUSTRAC is the IT system used by Westpac for their IFTI reporting simply was not fit for purpose. And one of the other comments that comes out of this particular case, and it's still going through the courts as we speak, and all commentators are discussing how big the fine will be. Westpac have set aside $900 million for this enforcement action. So they've made that announcement to the market that's how much they've set aside. I think they're going to be hopeful. I think on the basis of the CBA case that will exceed $1 billion, and other commentators are saying 1.5 to $2 billion coming towards Westpac in the only weeks away, I would imagine. So you should be able to follow that on your local media reporting. So technology facilitates so much for us, but if you're not doing your risk assessment properly, you're not doing a risk assessment at all, then you have the problems that faced the Commonwealth Bank. I talked briefly also about Danske Bank in Estonia. So the issue that they had is they bought another local bank. Danske Bank bought that bank, embedded that within the Danske framework, but didn't do due diligence on the customer base. They had a huge foreign book. The bank had 15,000 customers. About half of them were foreigners, were Russian. And in the space of, I think, here we go. So I've got some notes here. 58% were from Russia, Estonia, and Latvia. And one of the critical findings was that there was a lack of transparency about the ownership of each of the accounts because they had set up shell companies and so forth. So they had not considered the customer risk and they had not put in the right monitoring capabilities for that. And as a result, over about an 8-year period, they've laundered $200 billion. That they actually believe that there are other banks that are caught up in this as well, and they actually estimating that the scope of this money laundering enterprise, if you want to call it that, it exceeds $1 trillion. So absolutely amazing volume of money that's moved through such a tiny little country that the Basel AML index thought was very good. Also, can I also bring up ABN AMRO? So this is going back a little bit. So ABN AMRO had their transaction monitoring system in place, and the regulator that they were dealing with over that period of time said everything is looking good, although your transaction monitoring system is on version 1.3, it needs to be on version 1.4, so to speak. It was a $50,000 upgrade. ABN AMRO, multinational bank said, thank you very much, Mr. Regulator. We'll see you later. But behind closed doors, effectively said, we don't have $50,000 to spend on that. The following year, the regulator came back and said, yes, everything's looking good. Though your transaction monitoring should have been on 1.3. It's now should be on 1.4. So please, do that upgrade for those two things. Still only $50,000. ABN AMRO didn't do that. The third year they came back, the regulator said, you haven't done what we told you to do. We are now requiring you to, one, upgrade that technology to the latest transaction monitoring system version, and we are now also requiring you to review all of the transactions over the past 3 years. Every single transaction monitoring, every single transaction had to be washed back through the upgraded transaction monitoring system. So what was a $50,000 upgrade cost them literally billions of dollars. So a massive, massive bad decision, I guess, if you could call it that. Any questions along the way? I'm going to sneak into some technology stuff. Well, hopefully I've started to move into that for you now. Our starting point, again, is all about the risk assessment side of things. So this is an Australian company here called Arctic Intelligence, and they've got a product called AML Accelerate and another one called simply called Risk Assessment. And this, particularly the AML Accelerate, is a product that I use regularly. And it is designed primarily for smaller and medium-sized organizations, and it has a very, very detailed and thorough risk assessment process. We've got some screenshots here for you. It might be a little bit hard to see, but it sort of steps you through everything. As I said, you have to break everything down into bite-sized pieces, and that's the great strength of this is, as I said at the outset, you can be overwhelmed with the amount of things that have to be done. But when you move to a technology platform such as this, a lot of the thinking is done for you already. And throughout it, it poses a lot of questions for you that you may not have considered. Some of them you'll say, this is not applicable, so you can move beyond that. But then there's plenty of times where you go, okay, we need to have a real think about this. How are international actors potentially working, impacting on our business? One of our major intelligence organisations in Australia gave a presentation that I was at about a year or so ago, where they've assessed that around about 70 to 75% of criminal actors impacting on Australia, with the largest impact on Australia right now, are actually offshore. And so that's a significant issue for our international banks, where your main criminal actors aren't even here in your home country. They're offshore, but they are looking to use the finance systems in their home country to penetrate our country or your home country. That's the level of sophistication that we're dealing with. And so when we're looking at this product here, it really does sort of step it all the way through for you. It's the fastest I've done one of these risk assessments for a reasonably small organisation is about 4 hours. And you'll see, I'm not sure if I move the cursor, this section here, you'll see it breaks it down to country, product, channel, business, customer, and environmental issues. And in this environmental issues or environmental risk, it breaks down the crimes even further. So, crimes against the person, crimes of dishonesty and fraud and deception and those sort of things. So it really gets down into that micro level of assessment. As a result of that, it brings out the actual level of risk that are associated through various components of it. If you look at this slide here, can you see where I'm circling? Does that come through? Can you see my mouse moving?
Yes, Todd.
Yep. Okay, great. Thanks. So you'll see that there's a little color coding there, and very quickly, even though it's a bad image, you can see that red. So something there is high risk, something at green, so that's low risk, and something at yellow, so it's at medium risk. So you can very quickly see on a dashboard scale where we can focus that. And so that's going to bring it down at each of those individual levels, and then it will do an overall assessment of the enterprise as well. Along the way, as you're working through it, you can create different actions that you need to do, and as well, it gives you a dashboard report of the status of how you are managing that. So, say for example, one of the issues is, say, employee due diligence, where we haven't, we said we're going to conduct various checks on our employees, but we really don't have that policy in place yet. So let's create an action to create a policy that we pass on to our human resources department, and then we can track it through that over the time. And then also you can track, any breaches and incidents along the way. And there's this wider reporting capability as well. And so that's the AML Accelerate. The AML, the one that's just branded as risk assessment, that's a new product for them, and that's a lot more flexible. It's got a similar look and feel to it, but a lot more of the information is configurable to your particular organization. So if there are things that are specific to your organization, you can add them into the mix. You're not bound by what is already written there for you. But in the first instance, that AML Accelerate helps generate a lot of the discussion, because a lot of the initial thinking is done for you already, and then it poses all the questions that you have to step through. They also have this product called Health Check, which enables you to focus on an AML CFT assurance process. So looking at your systems through an internal review mechanism. Again, similar sort of look and feel, where you create the process that you actually want to undertake. You're going to conduct the assessment, add in the different the supporting information, that you're collecting along the way. So if you said that a particular area is compliant and we've cited various records, you can collect that information and attach that to the report. So a key concept when you're doing independent reviews is demonstrated evidence of compliance. So your organisation will be asked to not just say, yes, we are compliant, we do employee due diligence and we do these 5 checks on each employee along the way. I will say, demonstrate that to me, show me that the evidence that you have done, show me 20 employee records and that you have all of that. So this allows you to capture that information along the way if you so choose. And again, it's got all that reporting functionality. The great thing about this sort of stuff is it increases efficiency as well, okay? And also it creates a common communication platform. People who have access to the platform can log in and see what you were talking about, okay? And we are moving away from Excel spreadsheets and Word documents to conduct all of this work, which is absolutely critical. That helps in terms of version control. If you were to do a risk assessment, send that off to somebody via email. Again, you have risks in relation to your email systems being hacked and so forth. This is all cloud-based and secure cloud-based server arrangements. So you have that level of security as well. So, sorry, I've drifted off my point of version control. All of that is managed here for you within the platform, and there's in the background it is tracking who logs on at what time and conducts what function and so forth. So it has its own internal audit capability as well. Another product that I want to bring to your attention as well is this company called Demis Data, and they have identified that there are so many sources of data out there and so many publications, lists, and so forth, and a lot of organisations are subscribing to multiple areas at any given time. Contract management, quality controls, log in, log out, passwords, all of those sort of things. So as you conduct a particular investigation, whether it's for PEP or sanctions checks, or whether you are looking to conduct an investigation through a particular suspicious transaction, that this creates a great deal of streamlining. They manage a lot of the data that sits in the background for you. So they will essentially, their system reaches out to all these other places on your behalf, aggregates that information, and then delivers it to you, I guess, in a neat little package. They've provided me with this as a use case where they were working with a multinational bank, had 500 staff in their AML function, so a huge bank. And they were dealing with, they had an issue in relation to shell corporations coming on board, and their KYC process was very, very lengthy. It was taking 4 or 5 hours to conduct the KYC process. They didn't have all of the information available to them from the customer and so forth. So what they created was a specific function for this organisation. And as I said, they were doing all of these searches manually. They were going, Google searches using, going to different government databases, going to, things like WorldCheck or, any of those other list providers, Bureau van Dijk and so forth. So they were managing all of these different things. So what Demis Data did was they said, okay, what are all your data points? We've got up there the 35 client attributes. So that's what the client gave them, was 35 things that they were looking at. So, and we see some of them, tracked around the outside here about the businesses. So what was the website that they were using? What type of business? What was the email validation and so forth? So that's what the client had. these guys came up with a whole bunch more and said, okay, well, you've got that. We'll add additional ones onto it as well. So we give you better data in order to make the assessments. And down here they're saying each investigation is taking over 3 hours to locate and collect all of the entity attributes. What they managed to produce it in was a matter of minutes, because they was reaching out to all of those sources instantaneously with the use of the IT platform, bringing that all back and aggregating that into a package for them. So that not only creates efficiency, when you're reaching out to wider data sources, anybody that works in intelligence will tell you that in order for you to make as best assessment as you possibly can, you want to be looking across a wide breadth of data in order to understand the actual, to create an intelligence product in the first place. Otherwise, it's just disparate raw data. But you need to bring that together, analyze that in a meaningful way. And so we're taking 3 or 4 hours worth of work, distilling that down into 3 to 5 minutes of work. So the guy that was telling me about this said, look, it's actually seconds, but we don't say that because it just sounds like we're tooting our own horn. So we say 3 to 5 minutes. So I'm just passing that information on there. And that allows your staff to get on with the rest of the work that they have to do. If you have one staff member tied up for 4 hours looking at one client pack, that's not a very effective and efficient process. The other thing I'd like to introduce you to as well is what has been created in Australia is the RegTech Association. So this organisation, so they're not-for-profit, and their function is to help advocate on behalf of these technology companies. As I said, this is a new area, a new industry, and a fast-growing industry. So they help all these small startup companies working together, helping them reach to different markets, access government funding and so forth, and find different investors to and so forth. So they put on a forum every year as well, where they bring in national and international RegTech and FinTech firms. I'm going to ask a question. Who knows what the difference between RegTech and FinTech is? Omar, your hand's raised, yes.
Yes, we can talk. FinTech is financial technology. RegTech we call regulation technology.
Yeah, so FinTech is looking to disrupt banking in particular. They're finding new and innovative ways to work in the financial industry. And the RegTech side of things is about helping helping them meet their regulatory obligations, as the reg component tends to indicate. So yeah, fairly simple enough, but I thought I'd just bring that out there. So this organisation's only been around again for I think 5 years. They started with, let me check my notes, I think 8 members. And now, yes, in 2017, they had 8 members. Now they have 150. So it's a huge growing industry and a central position for advocating for the sector is very important to reach the ear of key decision makers in government bodies as well. And it's really about looking at this particular environment as its own ecosystem. So because some of these very smart technology companies specialize in a very unique area, and how do they ever get a voice? I was speaking to one gentleman a year or so ago at one of these forums, and his company was designed to put like a little data point on code through a payments system. I had no idea what he was talking about, but he designed one little piece of code that somehow attached to a payment instruction, which allowed them to perform some other function. I had no idea what he was talking about, but he was super excited about it. But when you're working at that level, how do you reach the market? How do you reach out to these sort of things? So very, very clever people creating some of this technology. And where we're finding them also, all these innovative people are in these technology innovation hubs. So I'd like to think that this is a global sort of thing. So I've just produced the largest one in Australia, this organisation called Stone and Chalk. They have a couple of floors of office space in Sydney and Melbourne, and they focus on helping small businesses grow and use their office capabilities, virtual office systems as well. They have like weekly functions where they'll have a guest speaker who will talk about new technology issues, whether it's from a legislative perspective or whether it's emerging technologies from other jurisdictions. They'll have people that come there, like-minded, working together, and you can sit around at lunchtime, talk to somebody from a different business and understand what they're doing, what are the challenges they're facing, how they're overcoming those challenges, and so forth. And as you see on there, there's 219 startup organisations, 850 people sort of work in that environment there, and 26 corporate partners. Now, the corporate partners is an interesting one as well. That's the power of bringing these technology companies together, is access to those corporate partners. Your multinational banks, your government departments, and other major IT companies that all support this Stone and Chalk facility. And again, that's self-serving because they get to see what is the latest thing happening. And then every now and then a company will disappear because they've been bought out by a bank or by a technology company or something, and say that little business is on a real winner. We're going to buy you, absorb you into our business, and then everybody's happy. So they're the sort of technology developments that are occurring that we've seen here in Australia. And so I'm going to start to wrap things up now. I've just got up there the recap of the things that we've been over. Understanding that the AML CFT world is a very complex place to work. I think everybody here on the webinar would understand that, has a level of operational experience in that. I hope you need to, and you'll need to be able to communicate that up your hierarchical trees in order to access the funding to put in the right technology solutions. And I think you should be looking at some of those case studies, and it's very simple to do your own internet search and find some of these case studies, and use that as support for your arguments to the people within your organisation that control the expenditure. I'd recommend setting up like a news alert on Google News Alert, so you're getting AML CFT related news coming directly to your inbox. Also, organisations such as KYC 360, you can subscribe to their news service and you get a lot of that sort of information come through. You'll need to be able to access relevant case studies to support the argument that you are clearly making to get the right technology that's fit for purpose. If it's not fit for purpose, then your organisation is going to be wasting a lot of money, and that's the argument that you need to be making as well. Everybody, thank you very much. That brings it to a conclusion. Happy to take any questions if you have along the way. And along the way, if we need to go, we can do further webinars in relation to going into more detail into some of these other topics if you wish. Mohammed, you had your hand raised there. A question, please. You there, Mohammed? No? Okay. Nasri and Vimal, thank you very much for your notes on the Zoom chat there. Please thank you also, Malavan, for organising this and getting everybody involved, and for inviting me to speak. I really appreciate the opportunity, and hopefully we can do this all again on another topic down the track.
Thank you very much, Todd. Thank you very much. Thank you, everyone, for joining us. So if there are, before we close, if there are any questions that you'd like to ask Todd, please go ahead. Otherwise, we can wind up. Does anyone have any questions?
Thanks, Omar, Francis. Appreciate that.
Mohammed?
Omar, I see you on LinkedIn, Omar. So nice to talk to you.
Mohammed, if you'd like to ask the question, please go ahead. I think probably he was trying to call somebody.
Okay.
Sure. Thank you, everyone. Thank you very much, Todd.
Thanks very much. Good night.
Good night.
Good afternoon.